Well, good morning. Good morning, everyone. We have a great group tuning in today. This is going to be our 6th webinar. Before we get started, I wanted to take a moment to introduce you to the North Carolina Blockchain Initiative, as well as today's presenter, Milligan Partners. Please note that if you have any questions, we will have a chance to have a Q&A portion at the end of our presentation today. And we'll keep everybody muted during the course of this webinar to ensure there are no interruptions. But in the meantime, please feel free to type your question in the chat area and we'll monitor that. My name is Dan Spooler, and along with my 2 colleagues, Eric Porper and Farouk Oxatin, we serve as co-chairs of the NCBI. So what is this North Carolina Blockchain Initiative, you may ask? This is a nonpartisan task force that was formed July 2nd, 2019 under the supervision of the Office of the Lieutenant Governor, Dan Forrest. And it was established to study, examine, and evaluate the unique attributes and use cases of blockchain technology, virtual assets, smart contracts, and digital tokens, with an ultimate goal of promoting opportunities for economic growth, cost efficiencies, and strengthening our state as a leader in technical innovation. I want to also thank our esteemed colleagues and members of this task force, all of whom are listed on the slide on your screen. As you can see, they come from a wide range of backgrounds in business, policy, academia, and they're all experts in their respective fields. We're truly grateful for their contributions and support. Without further ado, I'm proud to welcome Matt and Tyler Milligan from Milligan Partners. Based in New York City, Matt leads strategy and technology for projects for Milligan Partners. He has a strong background in toll technology and policy development. In 1999, Matt began his career in tolling with the North Texas Tollway Authority and was responsible for toll system maintenance and operations and ITS initiatives. He has since worked in the US and Canada on public-private partnerships and toll projects. He's active in the International Bridge, Tunnel, and Turnpike Association, the Chamber of Digital Commerce, and Hyperledger. Matt, I'll pass it off to you.
Thanks, Dan. And I'll let Tyler introduce himself as well. We didn't get a chance to do that. Tyler, if you want to say a couple words.
Sure. Thank you. My name is Tyler Milligan with Milligan Partners, managing partner as well, and spent most of my career in the transportation and technology industry. And thank you for the opportunity today to present and provide some insights into our current state of affairs with COVID-19, transportation, and how blockchain can create some opportunities to improve efficiencies and open up some new doors.
So we want to talk today about blockchain as enabling technology. And hopefully, our hope today is that we can give you some new ways to think about it, and especially in the context of everything that's going on right now. I'm sure everybody on the call is working from home. We're in a very different environment than we were a few months ago. And especially for government agencies, transportation has been affected dramatically over the last 2 months. And so we're going to take the things that we've learned in working with blockchain technology over the last 4 or 5 years and apply it to what's going on right now, look at things that we know about the industry, and see where it can provide some help. So we'll walk through the situation we have right now, what a return to the mobility looks like, and we can begin to talk about how can we think about recovery and what things are wrapped up in that, and then how can blockchain help the technology and also the politics. There's a lot of politics and a lot of agreements that have to happen when it comes to using blockchain in government. And then looking at a new collective efficiency. If we're going to do things in distributed networks and using blockchain technology, we have to do it together. We have to think together. And so we have some ideas about how that can help us in the situation we're in. So first, I know things are bad, but these are some quotes that have been taken from rating agencies, other organizations that are looking at what's happening to transportation right now. And really, the one that stands out to me is the rating outlook is negative. Some agencies are hit harder than others, but across the board, everybody's feeling the pain. And as things progress, I don't I don't think things are going to get better anytime soon. And that's what we really have to deal with, is what kind of situation are we going to be in 6 months from now, a year from now? How can we begin to think about things that we can do to make it better? And we've really gone from bad to worse over the last couple of months. As in April, 42 states had stay-at-home orders. So that means pretty much everybody is affected by this. We have unemployment that has gone through the roof. And talking to some of the forecasters that we know in the industry, no one knows how to deal with these numbers right now. We're just digesting stuff. And the biggest losses in mobility have come, have hit transit, retail and recreation, and workspaces. Google has put out a mobility report, and they update it pretty regularly. If you haven't seen it, I encourage you to take a look at the information that they're collecting. I have a link at the bottom of the slide, but you can search their COVID US mobility report, and it's got some interesting information. But the one thing I wanted to point out was that transit has been hit the hardest out of everything. And toll agencies have seen big drops in passenger traffic. And talking to agencies around the US, commercial traffic has stayed steady in some places. It's dropped, but it hasn't dropped as much as passenger traffic. And revenues overall are down, and there's really no end in sight for how this is going to play out. And one thing that hit me last week was Bill Gates wrote a blog post on his blog, Gates Notes. And I think everybody knows he does a lot of work when it comes to medical research and pandemics and things like that. It's an issue for him. And his comment was, even a year from now, it'll take a miracle to return to some semblance of normal life. And I want to start off with that, because as we think about how to deal with our revenue situations, it's just not going to change quickly. I think that's something that we need to get used to. And so what does a return to mobility look like? To explore this idea, we really need to consider three things: the ability to travel, the need to travel, and the desire to travel. It's three simple things, but it's a very complicated situation. So to regain the ability to travel, we have to have governments lift stay-at-home orders and international travel bans, whether it's restrictions that are international, federal, or state, or local, whatever it is. That's really the primary constraint that we have to deal with. And the second variable is the need to travel. With the exception of essential workers, this mainly depends on being able to return to work. That's a lot of the daily travel. And then the second part of that is the social interaction, the recreation, things like that need to return to normal as well. I think when we can go to a ball game or the movies without social distancing, we'll know that we have that one behind us, but I think that's going to be a ways off. And then lastly, and this may be the most important step when it comes to recovery, is regaining the desire to travel. And we need to feel safe in our journey as well as our destination. And that affects different agencies different ways. Transit agencies especially have to deal with the train as an environment, the bus as an environment. And if people don't feel safe, they're not going to go back to taking those modes of transportation. They might go to using a car, or they might just avoid the subway altogether. And the effects of those things on transportation services can be varied. It can have positive effects on one kind of agency or negative on another. You know, as people make decisions about what to do, we could see more cars on the road. We could see less ride sharing. A lot of the work that's gone into express lanes, a lot of that could change in the future. It just depends on how people react to the situation we're in. And the complexity really calls for new ways of doing business. We need to rethink how we operate in the ecosystem of government agencies and how we cooperate. The UN put out a report on the impacts of COVID-19, and the Secretary General had a statement. Everything we do during and after the crisis must be with a strong focus on building equal, inclusive, and sustainable economies and societies that are more resilient in the face of pandemics. And he ends that with, what the world needs now is solidarity. And this is important for us as government agencies and those that work with government agencies, because it's not always easy for us to work together. The politics of transportation is sometimes difficult, whether it's legislation or local politics or what it might be. Solidarity and working together is going to become even more important than it has in the past. And so I want to talk about blockchain in a new way. And I want you to begin to build some new associations. So don't think about the nuts and bolts of it right now. Don't think about the technical terms. Don't think about cryptocurrency, how that stuff works. Take all that and set it aside for now. We'll get to that stuff, but I want you to start with something. And I want us to begin to build some new associations. And this is the first thing. When we use blockchain technology, we're working together to solve a collective problem. And those of you that have worked with blockchain in the past, think about this and think about this context and put it in the government perspective. The most important part of this, especially for transportation agencies, is the working together part. It takes a collection, a consortium to make blockchain work, and it's often the most difficult aspect. It's important to understand that this is a fundamental piece of the puzzle. And now I want you to look at the pictures on this slide before you read anything. This is the second important association I want you to make. On the left, we have a decentralized network, or a drawing of a decentralized network, where every node on the network has access to every other node. And on the right, we have a map of the United States represented as interlocking pieces of a puzzle, all connected. I want you to keep these two things in your mind as we talk about blockchain and working together. In this context of working together, decentralized blockchain networks provide more flexibility for federal, state, and local consortiums. The blockchain platforms are the infrastructure that can allow a single agency to manage their membership in a wide array of operational groups. It's a completely different paradigm than what we've dealt with until now. And by design, the US is decentralized. You can think about each state operating on its own. It has relationships with other states as it needs, but they're all individual in a network of states. And with blockchain, by eliminating the need for a central authority and shared software systems for the hub model or the clearinghouse, we strengthen the ability for states to manage their individual needs. And this holds true for local governments too. We could just as easily have a map of a state with counties drawn as the puzzle pieces. And so it works on different levels. And I think it's really a game changer when it comes to cooperation and systems and government operations. And in times like this sort of arrangement has come up quite a bit. It's a challenge to have a concerted approach to how we respond to the effects of the virus, while each state develops its own approach. It's that those different layers of the approach, and the decentralization of blockchain networks gives us a lot of possibilities where traditional systems don't. And then the next thing is interoperability and data sharing. Blockchain technology allows any system to be interoperable with any system. This is one of the beautiful things about it. When we work in transportation especially in the tolling world that I work in more than others, the systems were not designed to work together. And a lot of times the vendors don't want them to work together. It's just not in their business model. And blockchain tears those barriers down. And data sharing is simplified and it's made secure. And there are platforms out there that are open source that do this, and Hyperledger and Corda are a couple, but there are others that from a government perspective are more accessible and the barrier to entry is lower. And a few years ago, we started developing tolling.network, and with the single purpose of establishing a proof of concept for toll interoperability. Tolling.network is a distributed ledger solution for toll interoperability built on Hyperledger. And what it does is allows you to share transponder statuses, license plates on a global level within the network or a regional level within the network. And then based on those things, you can share interoperable transactions back and forth. It's a very simple proof of concept, but it's an important step in moving towards real applications that use blockchain networks for transportation systems. And the important aspect of this slide is really the top part, the participant ecosystem. Transportation is made up of different agencies and authorities and operators, and all of those fit into the blockchain world when it comes to thinking about the ecosystem of participants in a network. And that's what we developed Tolling Network for, was something that could start with toll operations and interoperability, but could expand into interoperability for DMVs when it comes to license plate data, or tying transit agencies to tolling agencies so that you can leverage customer accounts in different places and have multiple ways to pay. Security and digital IDs are another big thing that blockchain can bring to not only transportation, but our situation today with COVID-19. Cryptography, we won't spend much time talking about it, but it is what helps secure the network, and also secures discrete data and allows you to share data in ways that's very controllable. And it's controllable for the entity that is sharing the data. And likewise, self-sovereign IDs are IDs that put the individual in the driver's seat, and the individual controls their identity and their data. We did some work with self-sovereign IDs and won the NYC Big Apps Challenge last year. And our product was a design of a solution for social services, but it applies now when we start to think about a safe workplace. And are we going to get into an environment where someone has to prove that they have had a vaccine, or they have to prove that they are essentially safe for a working environment? Our MyCity.ID design worked with services so that if you were verified for social services, your identity or your maybe your level of income or your family, if you were the head of the household, that you can leverage that verification across agencies when you're applying for social services. This kind of idea works in a safe workplace solution as well. You can create an ID. If you were to get a vaccine, you could be verified at an agency that is part of a broader network that is essentially interoperable, and they trust each other's verification. And then once you're verified, that verification information is attached to your ID. And then as you go somewhere else, if you need to prove your verification, that ID handles that for you. And the great part about self-sovereign IDs and blockchain networks and the way they work together is that you don't have to disclose all of your ID information. You don't have to disclose any personal information. That verification check that's on your ID from that agency that's trusted is the only thing that those other agencies need to know. So it protects your privacy, but it also allows you to be very transparent and be able to work amongst different environments. And so blockchain drives us forward really in three ways: decentralization, interoperability and data sharing, and security and digital IDs. And those things affect or can have positive effects on our operations in multiple ways. But really, going back to where we started, getting our agencies to work together is the first hurdle. And this is, in our experience and working in transportation and pushing blockchain technology over the last few years, this is the most important aspect. There's a lot of great work going on when it comes to blockchain platforms and applications, but until agencies can come together and work together in a network, the technology doesn't matter. So how can we be more efficient together? Oh, looks like I missed a little box there. The first one is supposed to say share customer data or share customers. And typically, customer ownership is a thing in transportation, and agencies work to have more customers, be able to have relationships with those customers. It's a positive thing. But in a world of working together and interoperability, we need to begin to change that mindset. And if we're in a world of where revenue is down as dramatically as it is and it stays down, the goal is to collect as much revenue as possible. And the first step in that is establishing collectability for every transaction that comes across our roadway or our system or our network. And one of the things we can do to increase collectability is to share customers. And it's a very simple term, but the idea is that if I know ahead of time that my customer is also a transit customer, if I'm a toll road, or if I'm a transit customer and there's a tolling customer or a parking customer, somebody else that already has an account somewhere and already has a payment method, if I can leverage that or they can leverage mine, that establishes collectability much earlier in the process, and it gets us closer to actually collecting that revenue at the end of the transaction cycle. And in the uncertain environment that we have, that is a really important piece of this puzzle, the first step of increasing collectability. And then let third-party apps work for us. Blockchain can help us do this at reduced costs. If we look at blockchain as an interoperability layer between applications, whatever it is, if it's just a customer account app, if it's a mobility as a service app, if it's a transit app that wants to use a tolling account for payment, whatever the integration point is, a blockchain network can be that interoperability layer and can make that much simpler. And we can use those apps to capture as many customers prior to the trip, and also to make it as easy for anyone to pay as we possibly can. And the third thing that we can do is share mobility data. As I mentioned when I started off, I've been having discussions with traffic and revenue professionals in the tolling industry that are trying to forecast what it's going to look like for agencies in 6 months or a year or 18 months. And professionally, they'll tell you what they go through and what they do, but when it comes to just speaking off the record, no one knows. And the biggest thing that can help them right now in this uncertain time is data. And not just access to data, but access to data that they know is going to stay the same. So when they come back and look at this data later, they know where it came from, they know its provenance, they know there's an audit trail for that data. And a blockchain network and the way you can share data is really, it's so well suited for this, because you have that audit trail built in, and it creates a much more stable data environment for the forecasters that need to provide guidance to agencies at this time. And so just to recap the big ideas, blockchain is about working together. That's really, if you walk away from this with anything, it's that to leverage this technology, we have to do it together. There may be applications that come along, but to really get the most out of it, it's about working together, and the politics come before the technology. We need to have a way to think about this technology in a new way. If we're going to use it, we need to have, we possibly need to go back and look at changing legislation when it comes to, a good example is the DMV data. If we want to share DMV data in newer, better, more efficient ways, there are some hurdles that we have to overcome legislatively. And then using blockchain for interoperability, whether it's within tolling, transit, parking, or anything else, it can happen on a local level. It can happen on a regional or national level. That's one of the biggest advantages that blockchain technology brings. And then look at using blockchain to support safe workplace with self-sovereign IDs. I think that's a really important potential solution that can provide not only the safety that we need, but also the protection for the individuals when it comes to privacy and things like that. And then use blockchain for sharing data that we can all benefit from. As transportation agencies, the more we can share information on a local level or regional level, the more we can help each other begin to understand where we're headed as things progress. And excuse me, frog in my throat. Those are the big ideas, and those are I hope we get some good questions. We wanted to leave enough time for discussion. We put a lot of information in this, hit it at the high points. But thank you very much for the opportunity to talk with you, and I'm happy to take some questions.
Thanks, Matt. This is Dan Schooler again, just checking in. We do have several questions that came in the chat box. I'm not sure if you can see those, but I can go ahead and read a few of them off. Let's start with Marcel Jones. He had a couple questions. The first was, who holds all of this information that is part of the identity? And then also he asked, let's see, what are the individual controls on the release of the data? Who owns the data?
Specific to IDs, Marcel, there's no one answer for it, but the way that we approached it was we wanted to leverage the existing government verification processes and the existing government systems. So we weren't creating something that was pulling information out of those systems. The data stays where it already is today. What we're creating is something that has basic information about the individual and those verification checkboxes, if you want to call it that. So the individual has an ID, that pieces of that ID are stored in those government systems. The individual has the ability to bring that information together and share it with an agency when an agency needs to see something from one or two or three other verifying agencies. I hope that answers the question.
We have another question that came in from Eli Sheets. His question was, why can't state agencies work together over a traditional database? Can citizens view and self-validate the data, i.e. their own location data, being shared by governments over a typically permission chain framework like Hyperledger or Corda?
It sounds like a couple of questions. Can you read that again for me so I can catch?
Yeah, sure. So the first question is, why can't state agencies work together over a traditional database?
Well, they can. There's nothing that says that they can't, but the efficiencies that come with distributed ledgers really make a difference. When you think about we'll just take tolling as an example, because that's something that we deal directly with. Every agency, to be interoperable, needs to share transponder statuses. And to do that, if you think about, there are probably roughly 100 million transponders in the US that need to get shared back and forth amongst all the toll agencies. That's a lot of data passed back and forth. Or even if you're using a regional hub model, you're still passing a lot of that information around in ways that's redundant. If you do it with a distributed ledger, each agency just writes their updates to their ledger, and that gets distributed amongst the participants in the network. And so you're not dealing with, if you're an agency that's participating, you're not dealing with anything other than your ledger. You get all the updates automatically and you write to your local ledger. It's just a more efficient and a more auditable way to do it. The benefits there, they tie not only to transponder statuses, but to license plates. We talked about other things that can get shared amongst agencies. When you talk about collectability, you start thinking about the DMVs. There are companies that focused just on essentially reselling DMV data to agencies that need it. That's the kind of thing that if DMVs all got together and said, we're going to do this in a distributed network, they could control the way that they do it. Some of the benefits that come with that are the flexibility and the rules. If you have a consortium that's doing interoperability like EasyPass or any other regional toll group, they have to all operate by the same set of rules. But when you break it up and you use blockchain, you can have global rules for some things, but then you have individual business rules with smart contracts on an agency to agency basis that you can't do in a centralized system. So it adds flexibility and it adds efficiency.
Matt, something else I want to add is that even from my perspective, when it comes to the realities of agencies working together and using traditional database system, typically and traditionally, there's a requirement if you're going to have more than two participants. It's not necessarily straightforward to hash out, procure, implement, and manage the overall governance structure around the technology that connects those entities. And you very quickly go from peer-to-peer to some sort of hub and spoke method. And it's when you move into a blockchain space, you allow for that inherent decentralized network that you can still ensure that the overall policy governance is maintained so that each parent entity can manage their own laws and statutes that drive some of their decision making, but you're not bound by that need to, as I mentioned, to procure, build up, manage, and connect a system between parties. And especially when you start to look at data sharing, what I've seen even within like the shared use mobility space, and when you start to look at sustainability, and you, like for example in Europe, as you're being driven by at the federal level from a data collection, data sharing, and data reporting perspective, that the more traditional database approach is more protected, requires a little more normalization before you get to that more comfortable, transparent data reporting layer. And that's my personal perspective on the infrastructure side of the puzzle. And then when you look at the something I've been thinking a lot about lately is the end user. I watched a webinar yesterday from UC Davis in their Policy Institute, and is Salita Reynolds, the general manager of LADOT. One of her comments with regards to the current state of affairs around COVID-19 and her trying to manage the movement of people within LA, they are struggling with something that they weren't talking about blockchain. They're just talking about their general state of affairs. And she stressed that looking forward, their intention is to provide customers better understanding and better delivering services to those customers that are at a more vulnerable place. And so even the conversation around when you start to look at what the future may hold for us from a mobility perspective, someone that could previously afford a car, their circumstances may have changed to where they're now in a place that their entire life they could afford a car, and now they're put in a place that they can't. And they may have to make significant choices around car ownership and mobility usage. And so as we start to look at the opportunities that Matt talked about for improving our policy structure, improving our data sharing structure between public and private entities, engaging third parties in a way that doesn't necessarily remove their ability to be, like for example, Lyft, Uber, these ride sharing services. So for example, if I have to move out of a car and into a shared use experience and go from bike to bus to Uber, me as a user, I expect that there's some connectivity, and we have an opportunity, and Salita recognized that in LA they have an opportunity to, from a policy and decision making perspective, reevaluate how they touch the customer and how that customer experiences their network and how their customer pays for those transactions across the network. And from the technologies that we've seen within our blockchain proof of concept, it breaks down significant barriers when it comes to connecting and enabling your own self-identity and improving the ability for you to manage and protect your own personal data, as well as connecting mobility services to move you from point A to point B.
So we have another question from Stephen. His question is regarding distributed data. What happens with large tolling agencies? Do they become silos, requiring more storage and processing assets?
Matt, you want to take that?
Yeah, I think I understand the question. If not, please ask a follow-up question if I don't quite answer what you're after. It depends on what you're sharing. I give the most common example. When you think about something like Bitcoin, everyone is sharing the same stuff. But if you think about doing it in a different way where distributed ledgers are customized to only what you need to know, you can control the information you're sharing. If you have, when you also think about, the fact that blockchain records live on forever, essentially, you can still handle those things in the way that you would handle a traditional database when it comes to archiving. It is a database. So when you think about a blockchain, just think about it as another kind of a database, and you can handle data storage and management in similar ways.
Thanks, Matt. So we have another question here from Marcel. He likes to say, we often hear the positive of new technologies and downplay the negatives. Being a half-glass empty person, AKA an issue spotter, what are the downsides and how do you address or minimize their impacts?
Thank you, Marcel. I appreciate your perspective. Blockchain technology is not always the answer. It has some challenges that come along with it. One of the challenges is first having a group of people that can agree on something. That's why I started with that, was that it really takes, the people part of it is very important. The other challenge is that it is still new technology. We've come a long way when it comes to blockchain platforms and what's possible over the last few years, but it is new. It's still developing. The things that you're looking at this year when it comes to what's possible will be very different than what's possible next year. I think those are the biggest things for me. Tyler, do you have anything that comes to mind for you?
Well, knowing Marcel as the eternal Dr. No, I am the eternal optimist. I think from a realistic perspective, assuming I understand Marcel's question correctly, I think there are certain aspects of mobility that require change. And the simple fact, like for example, I'm no expert at the moving and shaking of the New York congestion pricing project. But when you look at the subtleties around how many agencies are having to contemplate this concept of congestion pricing. So if you look at this physical space, you start to think about the decisions that move into the social equity, the environmental circumstances, the ability to move goods and services throughout the city. And then you start to look at, if I'm just a customer driving across a bridge or through a tunnel to get to my daily job, and how am I affected from that transactional experience, going from, I could cross 3 entities very quickly, going from New Jersey to New York City. And then I may get off and I may take a subway, I may park and take a subway, or get on a bike that I pay some fee for to go the last mile, so to speak. There's currently, from my experience, there's few good options that allow for those to connect me from point A to point B without having to use multiple applications. And for good reason. We're crossing jurisdictional lines. we're connecting to private third parties who want to keep their secret sauce safe. They don't want to allow themselves to become a commodity. So if you look at the different scooter companies, they just don't want to be a scooter plugged into a system. They want to have some value to you as a customer and touch you so that they can continue to gain value from that transaction. But in reality, we as customers need that connectivity. And from my optimistic perspective, I believe blockchain breaks down those barriers in a way that has not been available before. And it has and allows for these things to happen in a way that you can manage at an organizational level. And when I say organization, I mean each entity on the network, they can dictate organizationally the transparency and privacy around those data elements, so that if me as a customer connecting to some scooter app, scooter company, they need to protect the information for that transaction. However, there may be some third-party larger organization that has to collect and report on that information. You can very easily at an organizational level control the content that is then shared to that other party that needs to report on that information, without bleeding out into other channels information that would compromise their competitiveness as a private company. And so Marcel, I definitely think that the good news too, I think as optimist, I'll lean on the positive. Within the Hyperledger, there was a question I saw come through earlier, I think asking from Eric, talking a little bit about Hyperledger. I'll lean on Matt if we want to expand on this, but from what we've seen around the Hyperledger ecosystem, it has a significant commercial support from its parties. There's a significant amount of developers that apply a lot of time and effort to ensure that the stack and the infrastructure is stable and productive. And I think there's a significant amount of people that have spent time establishing the right framework and the right structure around how the application is developed. And Hyperledger does represent a significant amount of applications. So it's not just one. We use Fabric specifically, but within Hyperledger, there's a significant ecosystem of all kinds of tools and products that solve different problems. And Hyperledger comes from a supply chain base. Fabric comes from a supply chain base. And when you start to think about supply chain, you start to think about different organizations cooperating, moving product through a supply chain. Some entities need certain data points. Other entities need a larger, more global data perspective. It really ensures that when you start to think about government entities cooperating and plugging in private third parties, it has a very similar application. So that's one of the main reasons why we took that path.
So we had another question that came in from a legislative perspective. How can this technology improve efficiencies in North Carolina? And what can we learn from other states that are piloting this technology?
Matt, you want to take that?
I'll speak generally to it. If there are specific things that the person wants to know, I can do my best. From a legislative perspective, I think what comes to mind first, and I'll go back to like the DMV as an example. DMVs don't, or they just typically don't work with other organizations in a way that is open, because they're dealing with vehicle registration data and things like that. So it's a protected environment. If you think about things that are generally protected, from a legislative policy perspective, I think we should start looking at how technologies like this can offer those protections in new ways, rather than relying on older models and older technologies, at least from the policy perspective, to begin thinking about what's possible in the future and how we can make some of these things more efficient. Like especially with the DMV, it's one of the big headaches in the tolling world is dealing with DMVs, and it doesn't have to be that way, and technology can solve some of those problems.
Matt, something to add to that. When thinking about, I spoke to Jeff Kupko of Michael Baker. He's the project manager of the Columbus Smart Cities project. And one of the things he mentioned to me was a struggle they're having in Columbus is you have certain services that are managed or legislated at the state level, but they're at the city level. And they're trying to develop a solution that meets the city's needs. And I think as thinking about North Carolina, as we think to expand our city's ability to move goods and services and people across within the city space as well as across jurisdictions. And we think about these various different parties that will help us be more efficient. If you think about who I am as a person within Texas, Texas has issued me, the state of Texas issued me a driver's license. And that is my state identity. And whereas locally here, I'm in Dallas, I utilize that device, that ID, to validate who I am in various points for various services. But it's not unusual for me to have to register myself or engage some personal connection with my identity locally, that they may use that state ID as a point of information, but I still have to fill out a big form. Or you flip it over to the idea around a smart city integration, and you have these different, like for example, Lyft and Uber in the state of Ohio, they're governed by the state. And those laws and statutes are dictated at the state level. And locally, these third parties, from in talking with Jeff, they're not always as cooperative or as engaging as they would need them to be at the city level, because they may be trying to add data constraints that this third party doesn't have to do. At the larger state level, they're not obligated to make those decisions or make those constraints. Whereas locally, they need those constraints applied or those data interfaces applied for the greater good. And so I would argue that from a legislative perspective, there's a lot of value to contemplate how if you're a legislator at the state level, how certain services that are defined are either constrained or enabled at the city level or at the county level. And then start to think about identity and consider, like Matt talked about with the Department of Motor Vehicles or Department of Labor, Department of Licensing, depending on your state circumstances, where for really good reasons, they're legislated at and they're managed at that higher level. However, within, again, going back to Texas, or you look at North Carolina, you've got these various entities within the state that require those services to be top tier so that they can identify that customer or pass information between entities. Well, if that state level organization is not taking the city level or the local operator level into consideration, or creating that relationship to have that feedback loop so that changes are necessary, there's that relationship built, then you can start to move into a more cooperative, true mobility relationship. I think that, and even from something that's come up in a various technology mobility summits that I've caught, is that procurement of innovative solutions is key. I think that also there's times where unless you have the feds or the state or someone at a higher level indicating, hey, we need you to be innovative and try new solutions and be creative and fail fast, there needs to be that openness from a procurement aspect. And if the procurement layer does not allow you to fail fast or apply innovation, then you're just going to go back to what we did 3 months ago before COVID. Without those forward-looking opportunities, then we're going to limit the opportunity for that vulnerable society, the vulnerable person in society who's now on the front line of they've lost their job, their restaurant is closed, the restaurant's not going to open for another 6 months, or they work at the ballpark and they sell hot dogs and there's not going to be hot dogs for sale because there's no one in the stands. That's the reality that we're moving towards.
Well, thank you, Matt. Thank you, Tyler. I see you have your contact information up here on the slide. It certainly has been a pleasure to feature both of you on this very important topic. If there's any other questions, feel free to send them over to us via email. We just launched a brand new website, ncblockchain.tech. You can send us a note or ideas for future webinars, for future topics. You can also send us a note to we can connect you with Matt and Tyler, or you can connect them directly. We'll be hosting our next webinar in 2 weeks, but I just wanted to again reiterate our appreciation to Milligan Partners for today's webinar. And I also want to thank Blake Brewer and the Office of the Lieutenant Governor for setting up this task force for the state. On behalf of myself and our co-chairs, Eric Porper and Farouk Oxyton, thank you. And we'll see everybody next time. Okay.